Welcome to this explainer. Today, we're diving into the massive, and I mean massive, confusion taking over financial feeds right now regarding a highly volatile ticker symbol, LAB. If you've been scrolling through market discussions, you've probably seen traders absolutely screaming about massive gains, while others are warning of a total collapse. It's chaotic, right? It's completely contradictory. And to figure out what's actually going on, we need to bypass all that noise and look strictly at the data. So let's get right into it. Okay, so depending on which market you're actually searching in, looking up LAB right now shows you two entirely different realities. Are you looking at a crash or an absolute moonshot? The sheer volume of posts on social platforms like Binance Square shows incredible retail enthusiasm, but at the exact same time, financial AI bots are flashing major red warning signs. And this perfectly illustrates the paradox we're dealing with. On one side, you have a struggling medical stock called Standard BioTools, which trades under the ticker LAB. It's hovering around 93 cents, carrying a strong sell rating, negative moving averages, the whole bearish 9 yards. Those stock investors are probably scratching their heads, wondering why their portfolio isn't seeing the 364% gains everyone is hyping up online. Well, that's because on the flip side, we have the LAB multi-chain crypto token. This is where the absolute frenzy is happening. The crypto token is showing extreme bullish momentum, literally pushing past $3. Same exact ticker, two completely different financial universes. Part 1. The mobile app catalyst, driving the momentum. In just a 24-hour window ending May 3rd, 2026, the LAB crypto token skyrocketed an unbelievable 364%, hitting a peak of $3.18. And this wasn't some gradual organic climb either. Just 48 hours prior, this token was sitting quietly below 70 cents. This aggressive, basically vertical surge completely decoupled LAB from the broader crypto market. While Bitcoin was only posting a modest 1.4% gain, LAB was out there experiencing massive, coin-specific parabolic gains. Now, what's really fascinating here is the sheer volume explosion driving that price. We're talking about a 1,226% increase. To put that into perspective, that represents over $253 million changing hands in a single day. That is the hallmark of concentrated capital rotation. It tells us that traders weren't just casually accumulating this stuff. There was a frantic, urgent rush to get exposure to this specific token. So what exactly were they all rushing to buy? Well, the project itself is a multi-chain trading terminal. Instead of bouncing around between different decentralized exchanges on Solana, Ethereum, and the BNB chain, Lab routes the whole shebang through one interface using a single connected wallet. It offers spot, limit, and even perpetual futures trading with a flat 0.5% fee. But that massive volume we just talked about, that's a classic buy the rumor setup happening just ahead of their highly anticipated dedicated mobile app launch. You know how the crypto market loves to front-run product releases, and mobile access is widely seen as the ultimate gateway for mass retail adoption. Part 2. Anatomy of a parabolic pump, under the hood. So how exactly does a token move this violently? Let's break down the tokenomics. Out of a massive 1 billion total token supply, only about 77 million are actually tradable in the open market right now. The rest? Well, 282 million are formally locked up, and over 500 million are designated as to be determined locked. That means barely 7.7% of all lab tokens actually exist on the open order books. This incredibly thin tradable float means that when a massive flood of concentrated capital, like that $253 million we just mentioned, hits the market, the available supply is instantly eaten up. There simply aren't enough sellers to meet that sudden buyer demand. This phenomenon is called low float amplification. It acts like absolute rocket fuel, dramatically amplifying the price surge because buyers basically have to bid higher and higher just to convince anyone to part with their token. Now, combine that low float with a derivatives frenzy, and you've got a total powder keg. Analysts noted a staggering 7,500% spike in futures volume. As the price started ripping upwards, traders who bet against LAB, the short sellers, were totally trapped. This triggered $12.7 million in liquidations, with the vast majority coming from those short positions. When shorts are liquidated, the exchange literally forces them to buy the token at market price to cover their debt. This forced buying pushes the price even higher, creating a textbook short squeeze. Part 3. Red flags and risks beneath the gains. Now we have to look at the flip side. because massive parabolic runs rarely come without significant baggage. For instance, blockchain analytics firms flagged a suspected insider wallet that accumulated 575,000 tokens at roughly 20 cents apiece over several weeks. Right at the peak of this 10x rally, that same entity suddenly deposited their holdings onto major exchanges, locking in a cool $1.13 million profit. Now sure, it could just be a remarkably lucky trader, but moves like this raise serious market manipulation concerns. It really begs the question, just how organic is this demand, truly? Furthermore, if we look at the math, the token currently carries a $1.74 billion fully diluted valuation. That is a massive 13-to-1 ratio against its actual circulating market cap. With 79% of the supply still waiting to be unlocked, there's a tremendous future dilution risk hanging over this. As vesting schedules unlock for the team and early investors, millions of new tokens will flood the market, which can create heavy downward selling pressure. Add to that technical indicators like a sky-high RSI, which tells us the asset is extremely overbought, and you have a real recipe for potential trend exhaustion. Part 4. What lies ahead? The LAB roadmap. To their credit, the development team does have a steady track record of execution. Following their token generation event last October, they immediately executed a 20.9 million token buyback to support the price. In December 2025, they successfully integrated the Monad chain, and now, in May 2026, we have this highly anticipated mobile app launch. Looking further ahead to late 2026, they plan to expand the terminal's utility even more by integrating prediction markets, allowing users to speculate on real-world events, so they are undeniably building. I'll leave you with this final thought. The tech is clearly functioning, and the hype right now is completely off the charts. But as the mobile app goes live today, will the actual user growth and daily active volume justify a valuation creeping toward $2 billion? Or is this massive low-float-driven surge just a classic sell the news event, where early insiders cash out and late traders get caught holding the bag? Keep a close eye on the daily active user metrics this week. That data is going to give us the real answer. Thanks so much for joining me for this explainer. As this all plays out, we'll see which of the two realities you end up in, the crash or the moonshot. Keep learning.